Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. With only one trading session left before the US presidential election, Wall Street is bracing for potential volatility that could shape the economy for the next 4 years. Wall Street is also digesting jobs data released on Friday, which showed US hiring advanced at the slowest pace since 2020 in October, even as the unemployment rate remains low. But one thing to keep in mind, of course, is that the numbers were distorted by the severe hurricanes and a major strike. Interestingly, we have been observing some dollar weakness in the currency space. The dollar fell as the latest election polls show no clear advantage between the leading candidates. Good morning, JK. It is a very crucial week ahead. US elections have eclipsed Friday's jobs data. Polls show it's close to call a definite winner. What are the key things you're looking at?
Good morning, Swaraj. Yes, we are into a very crucial week and we are into a big binary event tomorrow. The outcome of elections will decide a lot of things, not just for the economy, for the markets as well. But just a day ahead of the key poll, we had, this morning, or rather over the weekend, one well-regarded Iowa poll put 3 points ahead for Harris, in front of Trump, and that has been regarded as quite a reliable poll. And in the last two elections, also Trump had a clear win in this poll, or rather in this region. So market is seeing this as a sign that Harris is probably the favorite to win the election, and so that's the reason why we have seen some reversal of those Trump trades in Asian morning. Not much, but in terms of dollar, not much, but definitely yields have come off, and the in stocks have slightly recovered. But again, wouldn't give it too much of weightage because we might well have another poll tonight, and you could be staring at different market. But this kind of volatility in the news and the markets is likely to continue. And perhaps, who knows, it may continue even after the election is over, because there are chances that if the election or outcome is close, tie, or even in favor of, let's say, Democrats, there are chances that people are reporting that there can be a contest and all that. So be prepared for a wild ride this week. If it is going to become, you are really going to be very lucky. Yes, on the economy side, October jobs report was very meager, 12,000. And even considering the hurricane effect and the strikes in Boeing and ports, this number perhaps undershot the expectation of the market. And therefore, at the same time, you have had the unemployment report, rather unemployment rate staying at 4.1%, and the wages were not coming down. Wage inflation was not coming down as well. Therefore, nothing conclusive as far as the jobs report was concerned. We did have an initial reaction, buying of bonds, but then end of the day, yields were up again, in fact, at a new high, new 4-month high on the 10-year yields. We have been seeing yields higher in UK and Europe as well. So jobs report was not a eventual market mover. And in any case, because of the big revisions that happen very frequently, and also the annual revision last year, which brought down the overall job creation by a fourth, I think the credibility of the NFP number is definitely much lower now. More, significant was the ISM manufacturing that fell unexpectedly to 46.5 from 47.2 in September, well below the forecast as well. Employment indicator was lower, new orders were also lower, but the prices paid were higher. So overall not a good report. Also there is New York Fed's GDP forecast. So we have been seeing a GDPs for the backward-looking number, but the GDP forecast of NY Fed for Q4, which we are into already, is now at 2%. Earlier, it was as high as 3.1%. So that's something again being influenced by some of the indicators that have started to show weakness. So overall, U.S. economy not giving such a robust picture, but it's not very weak as well. It's a very completely mixed picture as we head into the election as well. And also the FOMC meet on Wednesday, where a 0.25% cut is definitely going to be on the cards, with no dot plots expected to be published in this meeting. Powell's statements will be very keenly look forward to as far as the forward guidance is concerned. On the markets, we have had the dollar giving up a bit of gains today morning against most of the currencies, and particularly the Chinese yuan, which has come below 7.11, euro holding above 1.0850, and in fact GBP, which was seeing a big sell-off on on Thursday and Friday after the UK budget and higher borrowing, higher deficit. That has also recovered above 1.2950. There's a bit of dollar selling going on, not likely to sustain. Of course, dollar yen also traded below 152. So I think it only indicates market is well positioned on the long side as far as the dollar is concerned. So any good news or what the market considered as good news from inflation point of view, etc. I think that could be a real dollar negative, but we need to wait for some more time for that. As far as India is concerned, we ended the month at the weakest level for the rupee, and no change. Perhaps even if there were to be a change in the dollar's trajectory against INR, that will not come before we have these two events done with elections and the Fed meeting on Wednesday. We will have to wait for those outcomes. Yes, we ended the month with almost 11.5 billion of outflows, erasing entire inflow of the previous month. So that's somewhat sobering. Yes, but that's also a bit of seasonal effect on the valuation things. Eventually, I feel once towards the close of this quarter, depending on how the overall global macros come out, I think you will see a resumption of flows into India. Also, there are some analysts who are pointing to slowing down in the Indian economy, looking at some of the high frequency indicators, consumption, possibly coming down, urban consumption and perhaps even rural consumption. Also, they're pointing to, but then one thing, I think it can be a bit of a cyclical thing. And one point I'm also pointing out to is the fiscal deficit of the government for the first 6 months stood at 29.4% of the full year estimate, which means, the government has not spent enough money. Once the government spending restarts, I think you will see one more, big pickup in the economic cycle and as well as the consumption. So it's nothing conclusive. Rupee will stay in this range until we have bigger influence from the global markets, and we'll keep updating you on that. Thank you.
Thank you, JK. I'm just quickly summarizing. It's the day ahead of the crucial US elections. The Iowa poll, which has been a reliable indicator, has put Vice President Harris ahead of former President Trump in the election battle. But the volatility may continue even after the elections, as there may be some legal battles that could take place. Yields have been moving higher, not just in the US, but also in the European Union and the UK. Moreover, various data points from the US economy have been coming out weaker, as shown by the ISM data recently indicating some slowdown. But overall, it still remains a mixed picture, but which will make Fed's job trickier, which is meeting on Wednesday and will likely lower rates. Dollar has given up some gains today morning. Euro and sterling have made some headway. Rupee ended the month at its weakest level against the dollar. 84.10 is expected to hold before the key events, and post events there may also be some resumption of inflows. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.